Hi everyone, in this video we'll be looking at income tax. So I have some descriptions here about what income tax really is. So income is money you get when you're working every month, right? So the government collects money from citizens by collecting a certain percentage of tax from their salary or their income. This tax pays for our free education, our free healthcare, along with other things. Now, there are some formulae we need to remember when we're talking about income tax. So, gross income. Gross income is the total income before any tax deductions. So, basically, let me say you get $7,000 before tax. That's it, 7,000 is your gross income. Your personal allowance. So, personal allowance is the amount earned before any tax. Amount earned before tax is paid. Taxable income is the gross income minus the personal allowance, and your net income is the total income after all the tax has been paid. The term tax-free allowances is normally used instead of personal allowances sometimes, right? As you're seeing some examples that we're going to do. So here we have an example. A man's annual salary is $45,000. Annual salary, that means per year he gets $45,000. That's every year. His tax-free allowances is $13,000. He has to pay a tax of 20% on his taxable income. What is the tax that is payable? So the man's annual salary, his gross income, is at $45,000. His tax-free allowance, they told us, is $13,000. So now we need to work out what his taxable income is. Taxable income is the gross income minus the personal allowance. So that's the $45,000 minus the $13,000. So his taxable income is $32,000. So that's his taxable income. And remember, personal allowance and tax-free allowance is the same thing, right? So his taxable income is $32,000. Now, the question went on to say he has to pay 20% on his taxable income. So basically, he has to find 20%. So 20%, 20 over 100 times the taxable income, 32,000. And it just worked that out. We could cancel 2 zeros here, 2 zeros here, and then we get 20 times 320. So the tax payable is $6,400. So pretty simple. So a similar question here that you can pause. The video is very similar to the question before, right? So his annual income or annual salary is $45,000. So 45,000, that's her gross income, right? So that's $45,000. Her tax-free allowances is $13,000. So tax-free allowances is $13,000. So the tax payable taxable income, so the taxable income, remember, is the gross income minus the personal allowance, or we call them the tax-free allowances sometimes, like here, the tax-free allowances. So that would be 45,000 minus 13,000, right? So we are going to get $32,000. So $32,000 is taxable income. And now she pays 35% on her taxable income. So then 35% of her taxable income, 35% of $32,000, that's 35 over 100 times 32,000. Again, the 2 zeros at the bottom here can cancel with 2 zeros there. We get 35 multiplied by 320, and it just work out at 35 by 320, we will get 11,200. So $11,200 is her tax payable. Very simple and very short video. Any questions, feel free to ask.